The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Show. I'm Steve Sedgwick with Karen Cho and Ian King. And these are your headlines. Countdown to liftoff. Global investors bracing for what's set to be the biggest IPO in history when SpaceX goes public today, raising $75 billion.
President Trump calls off planned strikes on Iran, saying the two could sign a peace deal this weekend. Iran says nothing's finalised, though, despite Trump insisting it has the Ayatollah's backing.
It'll be soon, maybe this weekend.
And has the Supreme Leader approved this deal, sir?
I understand the answer is yes.
Hopes of a peace deal spark a global market rally with tech driving the gains. The KOSPI soaring by more than 8%, with the European benchmarks primed to rally too.
It's official. SpaceX has pulled off the largest IPO in history, raising $75 billion after pricing 555.6 million shares at $135 apiece. That's more than double the previous record set by Saudi Aramco, which raised $29.4 billion when it went public back in 2019. And the total could climb even higher. Bloomberg reports the company has granted its underwriting banks an over-allotment option to purchase roughly 83 million additional shares. If that option is fully exercised, the total amount raised would climb to roughly $86 billion, extending SpaceX's record-setting debut. So who are the winners in this trade? Well, first, CEO Elon Musk, who Reuters says will become the world's first trillionaire when trading begins today. Demand for shares was perhaps unsurprisingly huge, with Bloomberg reporting the deal was 4 times oversubscribed. BlackRock alone ordered $5 billion worth of shares, according to the Wall Street Journal. And putting that in context, that is just under the total amount raised in what was, until today, the largest IPO of the year, Cerebras Systems. Institutional demand may have squeezed out retail investors, a CNBC source saying that the percentage of shares allocated to retail will be in the low 20s instead of the originally expected figure of around 30%. This even as the Wall Street Journal reports retail demand came in north of $70 billion. Another winner, Gwynne Shotwell, the SpaceX COO and president, who is set to become a billionaire off the back of this debut. Now, on the eve of the SpaceX roadshow, CNBC's Morgan Brennan had the chance to sit down with Shotwell, who discussed the timing of the listing.
I wasn't sure we would go public. Having a private company was important to us early on because we really weren't focused on quarterly financials. We were so focused on the long-term outlook for the company. But we've gotten so many of the building blocks completed for so many of these different business areas, it actually feels like the right time.
Morgan also discussed the appetite for shares in the company.
We've been feeling over the last few years a lot of pressure from everyday Americans and our friends that wanted to buy stock. And there was just no way for these folks to get in. Unfortunately, probably some got scammed, but there was no way to buy SpaceX stock. And it feels like a company that, great people should be able to own a piece of.
And don't miss Morning Call, where we'll hear more from Morgan Brennan's exclusive interview with SpaceX President and COO Gwynne Shotwell. Arjun joins us with plenty more on this. Arjun, there are so many stats around. The one that struck me was that SpaceX will rank 7th among US-listed firms. We think about very big names, how profitable they are, the likes of Meta, JP Morgan Chase, Berkshire Hathaway, Eli Lilly, among others, even Tesla. It'll be 7th on the US markets.
Yeah, look, there's so much for, I think, investors to digest here around this IPO. And firstly, we should underestimate the incredible progress I think SpaceX has made over the years. What was once the realm of national governments, i.e. space exploration, SpaceX has done some incredible work in terms of reusable rockets, in terms of building a satellite constellation for internet to remote parts of the world. These are new developments, and space is seen as an area where if progress is made there, that could help life on Earth. However, from a pure investor perspective, when you look at this company, there are so many question marks, I think, around how to justify the valuation. And I think, firstly, the XAI portion of the business has been a huge drag on profitability as it builds out the Colossus data center. And we know that is CapEx intensive because of the amount of GPUs and everything that need to be bought for that endeavor. Of course, investors here are betting that this is going to be a huge part of the business going forward. And so that's one part of the equation to think at. The second is around the Elon Musk factor, and this is a factor that permeates through all of Elon Musk's companies as well. The stock gets a premium because of Elon Musk. I think that's true of Tesla as well, because a lot of people believe in Elon Musk and believe in the potential of his companies. But Elon Musk also presents a risk factor to the company, and we read through the IPO perspective. We heard that they said in the prospectus that the company is highly dependent on the continued services of Musk. They also said he does not devote his full time and attention to the business, given Tesla, Neuralink, and the other companies he's involved in as well. And he controls 85% of the voting power, which creates a new types of risk. And just the third point here as well is, in terms of the valuation, I think what it's predicated on, slightly crude analogy, but I think Mars is to SpaceX what autonomy, robotics is to Tesla. It is a big future bet on the company. Now, not to say it won't happen. I don't know if it will, but it's a hope of the company that it's going to propel itself to these brand new markets, these future markets, life on Mars, cargo transport to Mars. Similarly to how investors are believing Tesla is going to be a critical player in this broader autonomy and robotics play. And I think when we take all those factors into consideration, these are a lot of the things that investors are going to have to think about as they begin to think about investing in this IPO.
All right, stay with us. Thank you very much for that. Steve Wesley is the founder of Wesley Group, former Tesla board member. Steve, I've just checked, and you're in California, and you can get Marmite in California. Why do I say that? Because Marmite had a very successful advertising campaign. It's like a yeast in the UK a couple of years ago, where you either hate Marmite or you love Marmite. You know where I'm going now. It doesn't matter what I say, what Karen says, what Arjun says, what Ian says for the next 3 hours. People either love it or hate it. Where are you, sir, in the Marmitometer on SpaceX?
I'll take the SpaceX shares over Marmite's any day. But no, this is the big question. Look, this is going to be a blockbuster IPO, eclipsing Saudi Aramco's $25 billion IPO, 3x probably. Analyst expectations sky high. I think it may actually touch $2 trillion. The question is, how high will the fear of missing out, we call it the FOMO, driven by investor exuberance, go? But more importantly, how long will the share price stay there? Because things can change quickly in the market. Big question for me is this IPO going to be like Rivian that went public with a big splash at $100 a share, and today it's going to dribble down to 15? Or is it going to be more like Tesla that, people forget this, went public at a split adjusted rate of $1.13, today worth $400 a share? I think the answer is, when the founder's Elon Musk, people are going to be betting on the latter. We're going to see.
I mean, Steve, this is the point here. There's been no price discovery process during this whole IPO process. According to reports, Elon Musk set the price. I mean, that makes the opening day performance even less predictable than usual.
This thing is going to be hard to predict. It's the $1 trillion question. And it's tricky because you got three core companies that are completely disparate here. I mean, SpaceX, give them credit, the launch company is the dominant player in the sector, responsible for more than half of all rocket launches in the world. Starlink, the leader, accounts for 70% of U.S. satellite broadband market. And then XAI could be the most valuable part of the company, but it faces huge competition from OpenAI, Anthropic, Google. Punchline here, SpaceX is 3 moonshots in one company, but I think they're going to need to make at least 2 of these moonshots successful to keep that $2 trillion price tag.
Steve, how do you justify the 100 times sales is a question for the markets, but SpaceX has been talking about the market opportunity here and saying it spans roughly $28.5 trillion. And that's a huge addressable market. Do you think those numbers are wild, or are they actually accurate if you think about where this company could go with defense contracts, data centers in orbit, and some of the other ambitions it has?
Well, you've got to remember, Elon started with a teeny electric car company, and people thought he was crazy, and he proved everybody wrong. So he's done it before, and you got to give him credit. Personally, the 100x multiple feels a little frothy for me, especially because of the comps in the AI space. When you see firms like Anthropic trading at essentially an 8 to 10x multiple, I think my money might be on Anthropic. But $2 trillion valuation, SpaceX 100x multiple, compare that with NVIDIA 13 and Anthropic 8, I'd worry about that. But you got to give him credit. He's transformed the auto sector, space industries. I would just remind people those were somewhat sleepy industries. Beating Anthropic, OpenAI, and Google, that's not going to be as easy. One thing for sure, the SpaceX IPO is going to boost this entire space market. Get ready to see more IPOs in this sector.
Steve, just want to pick up on that point around the competition in AI. When Elon Musk kind of combined SpaceX with XAI, the view was that he wanted to build this sort of big AI infrastructure company and be one of the frontier labs as well. Do you think it was a mistake, given how much of a drag XAI has been on profitability, to combine the two at this stage?
Well, time's going to tell on that one, but I think you put your finger on something key. I mean, it's extraordinary to have transformed the global auto industry by bringing electric cars to it. And it's extraordinary that he disintermediated, Boeing and Grumman and Rockwell and all the other firms that are providing space vehicles. That's a big deal. But again, those were sleepy companies. Anthropic, OpenAI, Google, these are state-of-the-art, trillion-dollar companies, a lot of top scientists. The question is, could this be his Waterloo? We're going to find out soon. But more people have lost money betting against him than they've made. It'll be an interesting one to watch. I think everybody's going to be at the cooler tomorrow. And if you're in America and you're going to say, did you watch the Knicks game? And how much SpaceX did you buy?
And Steve, there's going to be a lot of speculation about sort of what comes next in terms of Elon Musk combined companies. Do you think there is a world in which SpaceX AI makes a bid for Tesla?
I think that is absolutely likely. It's going to be a tricky one. There'll be a lot of governance issues. People will have complaints about that. But for Elon to get all the pieces under one roof, to be focused on one big company, I think there's a good chance that ends up happening. It will certainly make him the first trillionaire on the planet. We'll see if he can hang on to that.
Steve, the SpaceX listing comes at a time when there's been euphoria around AI, even if it got a little bit bumpier in recent trading sessions. But SpaceX also has found its way into the circular system that is AI, where investors do have those lingering concerns. We know there was a deal with Google just recently where Google outsourced some of its capacity. And this was actually seen as a win for SpaceX, that it's using a cluster, 110,000 NVIDIA GPUs in combination with some of its hardware. But it does drag SpaceX into that circular system. Is that a positive or a negative?
Well, I think it could be both. I mean, the takeaway is people are making colossal amounts of money in the AI sector. This is where the world's going. Firms like OpenAI and Anthropic are the fastest growing firms in the world. Musk wants to get in on it. If anybody can move quickly and has the resources to do it, it's probably him. And after tomorrow, he's certainly going to have the resources to do it. But this stuff is expensive. You can be losing money for years. But here's where it gets interesting. OpenAI has just filed to go public as well, and they showed losses for over the next 2 years. Anthropic appears to be growing faster than OpenAI and has come out and said they're already going to be profitable in 2026. So the big question here is not just can you have the money to play, but how quickly can you show revenue growth? No one has come close to touching Anthropic. And how fast can you get to profitability? Those are going to be the two questions people are going to push SpaceX on for the XAI space. What's the growth curve look like? How soon do you get to profitability?
Okay, Steve, we've got to leave it there. Thanks very much for joining us this morning. That's Steve Wesley, founder of the Wesley Group and a former Tesla board member. Well, coming up on the show, President Trump pulls back from threats to strike Iran, claiming a deal has been reached to end the war and reopen the Strait of Hormuz. Plus, UK Prime Minister Keir Starmer loses 2 government ministers in the space of 24 hours amid opposition to his defence spending plans. And we'll continue the countdown to today's mega IPO with Josef Aschbacher, Secretary General of the European Space Agency. That interview is coming up at 7:30 UK time. Don't go away.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
No doubt looking ahead to today in the SpaceX IPO and how it lands in the market. This is the early picture on futures. A bit patchy, as you can see, flat on the S&P 500, looking slightly inclined firmer on the Dow, but slightly weaker on the Nasdaq. So not much in the way of straying from the flat line all round. In terms of the markets yesterday, and perhaps this does tell the picture, it was a very strong day as we closed up shop, but a lot of geopolitics as we kicked off the session. Trump threatening fresh strikes on Iran, only to be talking about just how close they are to a peace deal and whether it could come over the weekend. So there was a lot to digest for oil markets and then risk on assets as well. So the market very firm on the back of a couple of big usual suspects in this trading window, the likes of Micron, for instance, powering the S&P 500 into that firmer territory. Now, Asia markets picking up on that, and this is how it is tracking across the board. It is a much stronger day out of Japanese stock markets, more than 2% firmer across to the South Korean market. These are the two bookends, as you see around the technology trade, and both are much firmer in the session again today. The Hong Kong market and China also showing very strong returns, more than 1% in the trading session for the Friday. Well, European futures, as we look to get going, we've been trading slightly weaker for the course of the trading week, down about 0.2% before we get going this morning. We are also chasing some upside. Any suggestion that we might be getting closer to a resolution around the Middle East is always seen as firmer for these European markets that have been suffering that energy price story, which of course we heard firsthand from the ECB yesterday too. Ian.
Thanks, Karen. Well, US President Donald Trump claimed Washington has made a great settlement of the war with Iran, subject to the finalisation of documents, just hours after threatening fresh strikes. But according to Iranian state media, the country's foreign ministry spokesperson said a final decision has not been made. Well, Dan joins us with the latest. Dan, it feels like we've been here so many times before. I mean, it's Groundhog Day.
Fair point. And look, the big question this morning is there actually a deal with Iran? Markets certainly trading as if there is. We've seen stocks rallying in Asia, oil also falling, and investors really betting the worst of the crisis may be over, at least for now. President Trump declaring that the US has reached what he called a great settlement with Iran overnight. President Trump saying a formal signing could happen actually within days, and that the Strait of Hormuz will reopen immediately once an agreement is finalized. The problem is, Iran says there's no agreement as it stands. The president seems to be insisting that this proposal has been approved by Iran's senior leadership. Iranian state media quickly pushing back, saying no text and no memorandum of understanding has been approved. In fact, the Fars news agency went even further, arguing it was Washington, not Tehran, that had softened its position and moved back towards Iran's preferred terms. So that really leaves investors trying to separate the headlines here from reality. The timing of this also makes the shift even more dramatic, because you'll recall earlier in the day yesterday, Trump was threatening major military action against Iran, including strikes on Karg Island and moves aimed at choking off Iranian oil exports. By late evening, those threats had been shelved and the White House was talking about diplomacy instead. However, there are some indications that negotiations have been advancing. Trump saying he's spoken with Israel's Prime Minister, Benjamin Netanyahu, and other regional leaders. Netanyahu's office actually confirmed that conversation, saying Trump told him the final deal includes the removal of enriched uranium, the dismantling of enrichment facilities, restrictions on missile production, and an end to Iranian support for regional proxy groups. Of course, whether or not the Iranians actually have agreed to that remains to be seen at this point. There are still some major unanswered questions. Israel says it's not a party to these negotiations. The US naval blockade, of course, remains in place, and Iran has yet to publicly endorse any of Trump's claims. Perhaps most importantly as well, as you said, we have seen this movie before. Trump has repeatedly declared that a breakthrough with Iran was close, by one count more than 30 times over the course of this war, only for those talks to collapse. So until both sides are describing the same deal and actually put pen to paper, it's a deal in words only at this stage. And that's, of course, what markets are paying very close attention to.
Dan, thank you very much for that. North Sea operator EnQuest has agreed an $833 million deal to acquire 4 Malaysian offshore oil and gas fields. Its expansion into Southeast Asia would more than double its oil output and comes as energy firms look to mitigate the impact from the UK government's windfall tax introduced in 2022. Amjad Basasu joins us, the CEO of EnQuest. Amjad, thank you very much and congratulations on the deal.
Well, thank you for having me, Karen.
Oh, you're welcome. As explained in some of the introduction there, this does skew the portfolio towards Southeast Asia, an area that's been seeking more energy security and greater output. It bolsters the output of the company and grows EnQuest. So how strategically important is this deal for you?
I mean, first, beyond the 100,000 barrel a day threshold, which obviously is a key scale-up threshold, I think it's very important because we're going from 4 assets in the UK and 2 producing assets in Southeast Asia, 1 in Malaysia and 1 in Vietnam, to 4 and 6 assets in Asia. So Asia will become, it's a diversified portfolio, younger portfolio, but also it's a much more robust portfolio. So the actual break-evens of the portfolio are much lower. The operating cost break-even is $10 a barrel. The capital costs are very, very small for the 2P reserves there with about 138 million, so it's another $2. So our operating cost plus capital cost is about 12. And that really brings our portfolio break-evens down significantly. So our break-evens for operating costs will go down to $16 a barrel. But more importantly, the overall break-even for the portfolio will be $35 a barrel. Very, very comfortable in this overall portfolio in today's world.
Other than the number crunching and how positive it is for your business, there's also a big theme around energy security that is playing out globally. We just saw it in Dan's report that nations across Asia don't necessarily want to be relying on the Strait of Hormuz for energy. But I was going to ask you, would you be doing the deal today if we did not have this windfall tax in the UK? Because it does mean that you put your eggs in the Asian basket, not in the UK basket.
So I think the deal makes sense either way because I think it's the right assets in the right hands. We've been in Malaysia now for 13 years. We've been recognized as a very good operator there. We've won Operator Award of the Year twice in a row. Actually, just the day before yesterday, we won the Upstream Company of the Year for Southeast Asia. So I think we've had a very strong performance there, and I think that these assets are much better in our hands than they are in a larger company like Petronas's hands. So I think we would have done this deal, with or without the energy profits levy. Obviously, we can get to that energy profits levy and the investments in the UK. I mean, we still see the UK as important, but obviously, in investing in the UK needs fiscal support, as we've talked many times.
Really struck by what you said there, Amjad. I mean, it's 31% now of the business, UK continental shelf. I mean, at what point do you decide these assets are no longer core to the business?
So even though our production is 30/70, as you said, it's still 50% of our EBITDA roughly comes from the UK, so it's still a very important asset base. I still think we have more development opportunities in Asia, so we're looking at a gas development in Sarawak called Dewa. We have a joint venture with the government of Brunei, with 50-50 joint venture where we're taking fields there, one called Merpati, and developing that. So, and we also have our existing gas in Seligi, which we just put online late last year, 100 million standard cubic foot a day. So we see more investment opportunities in Asia at present. It's still exciting opportunities in the UK, but to a lesser degree, given the fiscal regime that's here. I mean, in reality, we have had it's I think a misconceived tax, because we have tax rates of averaging about 100% over the last few years, and clearly when we have tax rates of that level, it's very hard to invest.
Yeah, and you and all of your peers have been saying this for a long time. It's deterring investment in the UK continental shelf. I mean, the government just don't seem to care or be listening at least.
I mean, I think we had we talked last time about this. I mean, we had a very constructive discussion with the government on this oil and gas pricing mechanism, and that would have been a proper windfall tax, and that would have kicked in, at some periods during this last price rise. But in the end, it didn't come to fruition, and I think we were still waiting for that to happen. I think that would be very helpful for investment in the UK.
Amjad, this war has shown, and congratulations, as Karen was saying, this war has shown one thing, that there's an awful lot of product around to buffer against geopolitical concerns. We've got two devastating wars going on globally. The Russia-Ukraine war involving one of the top 4 producers on the planet, and then the Middle East war involving all the Middle Eastern players, one way or another as well. I would have grave concerns if I was a medium to longer term bull on oil, which you are because you're obviously investing, about actually what this signifies. If the world can put up with this, and actually, as of yet, hasn't had a dramatic... I know there's lots of protestations of doom, and I've heard them all the way through. They may well happen. But it just seems to me that the world has been very able to take on $90 to $110 oil, which is way below, by the way, the historic highs of the last decade or so. I would be quite concerned about the amount of product around, and the fact that you don't have an OPEC cartel in full control of the market when this ends, and if Russia does end their war as well. It's going to be a lot around.
Yeah, so again, I mean, there's a few, you're absolutely right. I mean, it's still higher. It's about 40% higher than it was pre-war, so it is a higher number. There are a couple of things that are taking place which actually add a lot of, reserves, or actually oil into the market. So the first is the EIA and IEA have been releasing over the last 3 months up to the end of June about 4 million barrels a day of storage, strategic storage. That isn't likely to continue because they're getting to very low critical storage amounts. The second thing is China has not been actually buying. I mean, last month
they've been a major moderating force.
And so that's also been very important. They've been using their 1.3 billion reserves, but also I was just telling Karen, I was in China last week, and they seem to be able to shut down industries that are not necessarily strategic and not necessarily very important, and have reduced supply, demand also, so the supply doesn't need to come in. So I don't know how sustainable that is in a normal economy.
Yeah, and I hear what you're saying, but this has taught a lot of us that we can't rely on hydrocarbons. We can't rely on hydrocarbon flows. And you will not be unaware of this surge. I mean, I don't know if Trump wanted this. I don't think he does, because he doesn't like windmills. He doesn't like, his words, not mine. Don't like windmills. But the fact of the matter is, there is a surge in EV adoption. I've said it many times on this channel. I own cars. I live in the countryside. We need cars. But my next purchase is not going to be an internal combustion engine. So I will be hedging my bets with an EV next.
I mean, I think that's perfectly reasonable. I mean, you still have to look at the component of of gasoline engines and internal combustion engines. It's about maybe 15-20% of the overall supply. And also, if you think about the number of cars, we are moving to EVs. 40% have been actually bought over the last year. All EVs, amazing, yeah. But I think there's still it's a bit of a transition. There's about 1 billion cars in the world, and it'll take years, maybe 5 to 10 years. But I agree with you. I think the supply or the demand for gasoline will come down. However, other demands are still going, very strong. Jet fuel is still very, very strong. Most importantly, petrochemicals. I mean, that's 15 to 20% growth every year, and continues to be very, very important.
Amjad, we've got to go, but just very quickly, if we get a deal over the weekend, as Trump is suggesting, maybe it's going to happen. What happens to the oil price?
Listen, I mean, it's as volatile as you can see. I mean, it's gone between, say, 89, 88 as it is now, to probably 125, 126. So it's. I mean, probably every word that he says can move the price in one way, or, one direction or another. I think, as Steve was saying, I think there's plenty of supply around because people have not actually taken, and we've used a lot of the storage. So I think we're going to be in a range. We're going to be ranged around between where we are today and maybe 100 for quite a time to come.